Time to get the business latest. Kate Moody joins us. Another day of waiting for the result of the US election. How are the stock markets reacting to this ongoing uncertainty?
Well, Mark, the best analysis that I've seen of this situation so far has come from a markets analyst at Axie, who said, "We were so ready for mayhem that mayhem was taken off the table by our preparedness for mayhem." Wrap your head around that. But that does seem to be the situation on the markets at the moment. Investors really, for the moment, taking this uncertainty in their stride and zeroing in on what we do know so far. Now, Wall Street's continuing its post-election surge. It scaled back slightly on Wednesday after the Trump campaign said that it would be asking for a recount in Wisconsin. And we have scaled back even slightly from where we were earlier in this session, as the Trump administration said it would be contesting more results already. The Dow Jones currently up nearly 400 points, down from 600 earlier in the day. The tech-heavy Nasdaq still outperforming, up around 2%. Wall Street is still on track for its best week since April. The major European indices closed higher as well. The FTSE 100 only slightly above the flat line there. The CAC 40 up about 1.25 here in Paris. The DAX nearly 2% in Frankfurt. So, just what's going on here? Well, broadly, analysts say that markets are embracing the prospect of a possible Biden presidency, in part because they expect him to promote a large coronavirus stimulus package and force it through Congress. But the likelihood of a divided Congress means that some of his more radical policy proposals, and in particular the reversal of Donald Trump's tax cuts for corporations and the richest Americans, will be harder to push through.
Erstens kann man sagen, wenn Herr Biden Präsident wird, gibt es weniger Handelskriege oder gar keinen Handelskrieg mehr. Es gibt mehr Ruhe in das geopolitische Korsett. Da hatten wir ja in den letzten 4 Jahren ja einiges, was schiefgelaufen ist. Und das heißt eben auch, dass unsere Exportwerte mehr wieder exportieren dürfen, auch nach Amerika, was auch für Arbeitsplätze wichtig ist. Zweitens ist aber auch wichtig, der Senat bleibt in Amerika wahrscheinlich republikanisch. Das heißt, massive Steuererhöhungen oder die Zerschlagung von Branchen wie Hightech, Pharma oder Banken sind nicht zu befürchten.
And we'll, of course, be keeping an eye on how Wall Street reacts to any developments coming out of the United States throughout the evening. Well, job creation will be a top priority for the incoming administration, whether it's Republican or Democrat. After years of solid growth, America's labor market has been battered by the coronavirus pandemic, and the number of new applications for unemployment benefits fell slightly last week to 751,000. The pace has remained relatively stable since the beginning of September, after peaking during the lockdown in March. Before the pandemic, the average number of weekly claims was just over 200,000. Nearly 22 million Americans are still claiming unemployment benefits under regular state programs, extended relief, or the emergency pandemic support programs. Economists say many of them could remain out of work for the near to medium term. The October unemployment rate is expected to drop from 7.9 to 7.7% when data are released on Friday. 4 years ago, when President Trump was elected, unemployment was 4.7%. The U.S. Federal Reserve, meanwhile, will be releasing its latest policy decisions later on today. All of this will help us paint a better picture of the economic challenges facing either Donald Trump or Joe Biden. Well, the British government has stepped up its financial support for businesses and workers as England begins a 4-week lockdown to curb the spread of the coronavirus. The Bank of England held its interest rates steady, but it increased its stimulus program, pledging another £150 billion, or around 166 billion euros, to its bond-buying program. The Treasury also increased its aid for the self-employed and extended its furlough or wage support program, which had expired at the end of October. The Chancellor of the Exchequer said the financing would continue through March and be available to affected businesses across the United Kingdom.
But as we saw from the first lockdown, the economic effects are much longer lasting for businesses and areas than the duration of any restrictions. The government will continue to help pay people's wages up to 80% of the normal amount. All employers will have to pay for hours not worked is the cost of employer NICs and pension contributions.